Hi everyone, my name is Siwang. Today we are going to present the analysis report prepared by our team for River Group Limited. I have divided my presentation into three main parts. The first part is some introduction of the company. The second part is portfolio forces. And the third part is assessing profitability among competitors and relative valuation. Now, let me introduce an overview of River Group Limited. River Group Limited is a locally owned public listed company in Southeast Australia. It was founded in 1932 in Sydney. The company's business scope is the kitchen products industry. Currently, River Group is one of the biggest manufacturers of kitchen products with a market capitalization of 2.8 billion. Also, the company has operations in Australia, New Zealand, South America, Hong Kong, UK, Mexico, Europe, and Korea. It employs approximately 390 people and is managed from its headquarters. Now, let's give the floor to Jiaxu Sun. We'll talk about the business strategy of the River Group.
About the basic strategies. The breweries have both the design innovations teams have become Australia's leading product development team, have brought its high-quality range of products to international markets. In 2009, the Food Thinking Market Culture plans were launched to integrate design and develop capabilities. Work with professional chef and consumer to understanding food and technology. Consumer need and innovations continues to research a new generation of consumer and drive accelerate innovations. And under the BRG's group, there are a few subsidiaries. Sage is one of the BRG strategy's core. Currently supply high-end kitchen products markets in more than 80 countries. Sage continued investment distribution of high-quality product designed and developed by Sage to ensure the brand influence and market positions. The breweries have co-brand coffee machine service with Nespresso and become one of Nespresso's main partners in the United States. Chef Steps acquire Chef Steps to open chefsteps.com web property to become the brewery brand's product by launching a new version of the product. Touch. The company design and sell the premium coffee grinders for international markets, complete the existing coffee business for BRG Group, bring together to the design and marketing for the product for two companies. And pass to the next person.
Now, let's go into talk about the home appliance industry. The Australian kitchen appliance industry is particularly competitive with many competitors in the same industry from different countries also having a foothold in the Australian appliance market. Some of these competitors are LG, Samsung, River Group, German Mail, and many more. Samsung has been the leading brand among many appliance brands. In 2023, the global home appliance market revenue is expected to reach $720 billion with a growth rate of 4.81% among them. The sales of a large home appliance are expected to reach $460 billion, and the Chinese market is the most important income part. It is estimated that China's home appliance market revenue will reach $166.2 billion in 2023.
Hi, this is Eric. I will analyze the home appliance market through Porter's 5 forces. First, the barriers to entry in the home appliance market are high because you need a lot of money to support your company's technology development, sales network construction, and so on. This requires at least millions of dollars and is only the initial investment, so there are hardly any new entries. Secondly, the buying power of buyers is very high, because if one of my appliances is broken, I can buy from another brand at will. I will not lose anything. Furthermore, I have a lot of choice by comparing the price and performance between the different brands. Next, the buying power of suppliers in the home appliance market is medium. For basic materials like copper, switching suppliers has no impact on the company. However, for some materials or parts that are difficult to manufacture, such as TV screens, suppliers have relatively high bargaining power. The competition in the home appliance market is extremely fierce. Since there are a large number of brands in the market and the product differentiation is not big, they can basically replace each other. Then all companies want to increase market share through lower price or better marketing strategies. Some companies will invite celebrities to endorse increase the impact of their products. Finally, the threat of substitutes in the home appliance market is huge. With the development of science and technology, more and more people like to use smart home appliances to improve the quality of life. For example, in the summer, you can use the mobile phone network to turn on the air conditioner for a period of time in advance. When you get home, you can feel cool at first time. Just no need to wait any longer for the room temperature to drop.
In terms of profitability, Bravo Limited 2022 annual report show a net profit of $89.2 million after tax and 24.7% increase compared to its previous year. With a 22.2% return on equity, the Bravo Limited has outperformed its competitor in terms of net profit margin and return on equity. Bravo Limited revenue and sales increased by 15.8% compared to previous year, driven by strong demand for its product in North America, Europe, and the Asian Pacific markets. The company's revenue growth has also due to the successful launch of its new product in the coffee, foods, and beverage categories. Finally, based on relative valuation analysis, Bravo Limited's share has also undervalued compared to its peers. Therefore, the company has potential for its future growth and investments. Overall, Bravo Limited has strong financial performance and growth in the financial year of 2022, with a focus on innovation, expand its global market and reach, and returning capital to its shareholders.
For the buyer or sales, the Deputy Chairman and Lead Independent Director Lawrence Myers bought 578,000 worth of stock, increased his stakes by 23%, according to the analyst. When an insider buyer a stock at a price higher than the current price, because it shows that they think it's worth buying the stock even at a high price. Investors look for the company prospect before buying a stock. Acquiring a great company with the promising perspectives at a price below market expectation is always a good investment. And BRG earning focus of 41 growth over the next few years. That's very positive for the future. This should lead a strong cash flow driving up the stock price. Stock prices are typically look for the outperformance, and BRG's share price has raised 83% over the past 5 years, significantly outperforms the market return around 18%. According to the BRG stock charts, the short, medium, and the long movement average show the stock price trends. According to the focus yields, an annual growth rate of 12% and 8.7% respectively.
the market is very optimistic about the prospect of BRG. We think BRG is a long-term buy.